Hello, today we are talking about the CSRD's new draft ESRS E4 topical standard for biodiversity. On November 30th, the European Financial Reporting Advisory Group, or EFRAG, released the final draft of European Sustainability Reporting Standards, or the ESRS. The draft reduces required data points by 61%, provides clearer materiality guidance, and gives companies more flexibility in how they conduct assessments. Flexibility has also been built into the entire new draft, which can be helpful, but also confusing at points. Here we clarify an important point about the double materiality assessment as it relates to environmental topical standards. What is double materiality? In a double materiality assessment, companies evaluate sustainability topics from two perspectives: impact materiality, how the company's activities impact the environment and society, and financial materiality, how environmental and social issues affect the company's financial performance. Double materiality remains a core requirement of the ESRS. With this updated draft, companies have more flexibility in how they conduct their double materiality assessment. You can choose either a top-down or bottom-up approach based on what works best for your organization. However, the core purpose remains unchanged: understanding and documenting your process for identifying impacts, risks, and opportunities, and then assessing which ones are material enough to warrant disclosure. Your company must explain the key methodologies, inputs, and assumptions you use to reach your conclusions. The critical principle is that your chosen method must accurately represent your material, impacts, risks, and opportunities. Most importantly, the level chosen shall not obscure material information. The ESRS topical standards cover environmental topics, social topics, and governance. The fundamental principle for double materiality is straightforward. If a topic isn't material for your company, then you don't need to report on that topical standard. Let's say your company completes a top-down double materiality assessment and finds biodiversity to not be material. Are you still required to conduct a location-based analysis? Here's the key tension. While ESRS allow flexibility in your overall double materiality approach, environmental topics require location-specific analysis. A purely top-down assessment that dismisses biodiversity without examining where you actually operate would likely fail an audit because it lacks the reasonable and supportable evidence that the standards require. For environmental standards, your materiality determination must account for geographic context, the actual places where your company operates or has impacts. This includes factors such as local air, water, and soil quality conditions, water availability in water-stressed regions, and the presence of threatened species and sensitive ecosystems in biodiversity-rich areas. Note that for social topics, the ESRS require your DMA to also consider local factors that could create or add to negative social impacts. This includes understanding the presence of human communities, particularly vulnerable populations such as indigenous peoples. An activity that seems immaterial in one location might be highly material in another due to the local nature context. Your materiality determination for environmental topics must reflect geographic context. An audit will examine whether your double materiality process meets three key principles. First is fair presentation. Your sustainability statement must fairly present all material impacts, risks, and opportunities. If you have physical sites but didn't check their biodiversity context, your representation is incomplete and potentially misleading of your actual or potential impacts. The second is reasonable and supportable evidence. You must base your conclusions on available evidence. For biodiversity, if you have not completed any geographic assessment of environmental exposure, your non-materiality claim lacks the necessary evidence required by the standards. And third is disclosure of methodology. You are required to disclose your double materiality process, including methodologies, inputs, assumptions, and how you considered heightened risks in specific geographies. If your methodology skips geographical assessment for biodiversity, auditors may find it fundamentally flawed for this specific topic. The ESRS referenced the first three steps of LEAP as a helpful example, though it's not a mandatory framework. However, the core function of LEAP, locating where you operate, evaluating the biodiversity context, and assessing your impacts based on specific geography, is essential for credibly determining whether biodiversity is material to your business. That said, we recommend using the LEAP process because it is the most comprehensive and straightforward way to meet the ESRS requirements. It provides a clear, structured approach that directly addresses the location-based analysis the standards require. Companies must report material information regarding their value chain. However, the ESRS requirements acknowledge the difficulty of collecting direct data across the entire value chain and allow flexibility in the following ways. Data collection. Companies can use direct counterparty data or estimates based on practicability and reliability. Estimates and proxies. Acceptable sources include sector averages, sample analyses, peer data, spend-based data, and other proxies from internal or external sources. Focus scope. Companies need only assess areas where material impacts, risks, or opportunities are likely, not every possible value chain element. And top-down approach. Value chain materiality assessments can use regional averages, sector data, or public information without direct input from value chain actors. The draft ESRS are expected to become legally binding in mid-2026 or shortly after. They are intended to apply for reporting on the 2027 financial year, with reports published in 2028. Companies may adopt them early, however, in 2026. So why start now? Due to the complexity of nature topics, we have found that it takes companies 3 years to reach a level of confidence where they are ready to report meaningful insights. A basic assessment in the first year helps build fluency in nature risk and identifies areas of measurement focus. In the second year, a full TNFD assessment uncovers the full risk picture, enabling the first deployments of nature insights across the business. In the third year, expansion of the assessment to the supply chain and the development of nature targets and action plans can occur, with companies positioned to publish regulatory compliant nature risk disclosures. Understanding the requirements is one thing, but efficiently meeting them is another. At Dunya Analytics, our platform is built specifically to address the location-based biodiversity assessment challenge that ESRS E4 presents, both for your direct operations and supply chain. As we mentioned, the ESRS referenced the first 3 steps of the LEAP process, which our platform automates for you. Locate interfaces with nature, evaluate the related impacts and dependencies on nature, and assess your associated risks or opportunity. Our platform handles the technical complexity of data collection and geospatial analysis, so you can focus on the strategic work of embedding the results in your business and developing appropriate responses. Whether you are just beginning your ESRS compliance journey or refining your existing approach, we can help you meet the geographic context requirements with confidence. If you're ready to get started, please scan the QR code and contact us to learn more about how Dunya Analytics can support your ESRS E4 compliance.